Top of the morning, traders. Um, 7 a.m. About to kick things off. I've already gone and looked through the majors, and it looks like we had a little bit of consolidation once again across the board. But the Euro USD is the most interesting because after the release of the final resolution with the European finance ministers last night, we basically drifted sideways until Europe opened today, and then we had a little bit of a move lower, but it hasn't been a drastic. And you can see we still haven't broken out of the bottom of this range. They made an attempt, but it has not confirmed itself. But I think it probably most likely will happen today in today's trading, and we'll probably get a push back down towards this 128.85 level. But I'm waiting for the opportunity to enter my trade at the exact right moment, and that could be right after the durable goods order or right before the durable goods order, which is due in North American trading. Durable goods will probably come in line, but it will be much lower than the previous reading, and this could lead a little bit to a run to the dollar as traders soak in everything that's gone on with the European and Greece resolution. So what we're looking for today is, once again, we're still watching this resistance zone between 130 and 130.20 as to keep to contain the top side pressure. But if we can get a good nice move below this, it's right about the 129.40 area. I'm definitely looking for a short heading towards a much 128.85, and then maybe actually even all the way back to the 128 level in the near term. Next pair we're going to look at is the Great Britain USD. As you can see, this pair, ever since its spike pop high on Friday, has just been consolidating in this 40 pip, 50 pip range between 160.50 and 160. There's really nothing you can do right there at this moment. You could scalp the inside of it, or the inside of a 50 pip range, but your risk reward, it's really not worth it. We'll have to wait for a break to the top or the bottom in this pair to get interested. If we get a break to the bottom, the first target would be all the way down at the 159 level. If we get a break to the top side, we could be on our way to this new range around the 160, 180 level. Well, no, we're in the older support at 160, 180. Let's show you that on a daily chart. We get a better view. You can see that 160, 180 level contained the pair for quite some time, quite some time in October, and so we're just going to have to watch this price action and let the markets tell us what to do right here. There's really no way to predict which way things are going to flow out of this. The Aussie USD. You can see that the Aussie's been in a little bit of a world of its own. It is still testing the highs. It hasn't given up any of the ground from the move higher on Friday, and it's actually above those levels. And right now it's testing resistance at 104.80. Now the problem with that, trying to go long with this pair at 104.80, is it has significant resistance right above at 105.20, and then followed by the declining trend line, which comes in around 105.60. And if we look on a daily chart, I'll show you where all that's coming from. The trend line you can see is price action throughout this entire. Let's get rid of all this. Remove label. Has priced the cap price action on this entire move lower. And you can see just recently the pair has been trading sideways. So any move up to this area will probably find resistance, but it is nice how the pair did technically play out very well, basically reversing right above the 50 fib, which came in at 105.30. You can see the pair made it all the way down towards the 101.50 area. So we're going to have to watch this, and if we do get a break above this resistance zone, I would have to break above the 105.60 before I'd be interested, and then we'd more likely see a new test of the highs around 108, 108.50, then maybe all the way up to 110 over the long period, not in a short period of time. But I would think that we would probably get a push lower at this level. We'll have to watch the resistance zone between 104.80 and 105.20 to see which way things blow. Now, New Zealand, on the other hand, has just been consolidating in a very nice flag pattern, just going sideways in the short term. What we'll have to watch in this pair is we want to see a break below 82. It gives us the opportunity to go short, looking for a move down towards the 81, 80.50 area. If we break above the highs here at 82.50, we're probably going to be on our way up to 83 and 83.50. So we're going to have to watch the highs, recent highs at 82.50, and we're also going to watch to see if we get a break below the 82 level for a move lower. The CAD has just been moving sideways also in its own little narrow range between 99.50 and 99.20. We have to get a break either way. And obviously this pair is probably going to follow risk. So if we get a drop in the euro, we'll probably see a move up in this pair back up to the 99.50 area. You can see it made an attempt to break it earlier in the week. So basically just like the Great Britain pound, we have a short, narrow range here, and we're just ping-ponging in between at 99.50, 99, 99. Now if we break below the bottom of this range, we're probably going to go down to touch the 98.70 level. If we break above the top, it probably will lead to a test of parity, and then maybe again the 100.50 area. The yen consolidation is the game. It did play out pretty much exactly how I anticipated it, though. It's gone down the test, and it's found buyers here at this 81.85 level. I would like to see it break even lower and go down towards the 81 level, and at that level we could definitely see it would be telling if which direct way the market's going to go. If we get a bounce at that level, then more likely we'll get a continued move higher. If we break low, though, that would be just probably a retracement of all. But odds and are the yen will consolidate for a while and then probably continue to move up, because they do have a new prime minister coming in who has, or a new government that would most likely be in favor of weakening the yen furthermore. Let's take a quick look at the Aussie pairs. You can see we have consolidations. The Aussie JPY, Great Britain JPY is still up around trendline support, trendline resistance at 132, and the euro fell with the euro pair, the euro JPY, excuse me, fell with the euro in general. But let's see what we have on a larger context. The cross is looking heavy at this point, and you could consider going short with your highs above these current levels at 107.08, when you would have to target a move down to the 0.61 FIP at 105.80. But I would rather see a break at the bottom of this trend here, 106.10, look for a move lower. And I'm going to guess that the CAD, yes, is going sideways, as is New Zealand, because that's always seems to be the case. All right, everybody, so the key to today's trading is we're going to watch this euro cross, and we're going to be seeing if we get a push lower below the lows, in which we can go short, and that'll probably take risk with it across the board. If not, we'll watch the Aussie, because we got to push up on that. We could see break of these levels. We'll have to watch in New Zealand, and we could be on our way to a test of the 105.60 and the 106.30 levels. All right, everybody, good luck trading. Keep a look on the Twitter feed, and remember to keep your trades keen and deflate safe.